Hi, everyone, and welcome to the REI Investor Talk Show. I'm Neale Petersen. I'm the founder and content-in-chief of Real Estate Investor. And today we're diving into the latest insights from Absa's first quarter 2025 Homeowners Sentiment Index, and one of the country's most important indicators of consumer confidence in the market, certainly in the property market in South Africa. So joining us is Nondumiso Ncapai, Managing Executive of Absa Home Loans, to unpack the data behind the headlines, from off-grid living and buyer trends to investment confidence and regional shifts. Welcome, Nondumiso. It's great to have you here. Let's get straight into the conversation. Wonderful to have you here.
Absolutely. Thank you, Neale, and thanks to the listeners and those that are watching.
Absolute pleasure. So let's start off with the big picture. What stood out most for you in the first quarter 2025 Absa Homeowners Sentiment Index results?
Neale, thank you so much. When the numbers came through, we were quite surprised to see the sentiment outcome actually holding. In fact, at 85%, which we deemed to be quite high, given the fact that we've run the index, I don't know if you would remember, back in the days in 2015, and this has been one of the highest sentiments that we've seen. I think what's particularly interesting for me is the period in which we ran the index, and it was during March, and you would recall that was in between a lot of things that were happening in the country. We know that the rates didn't come down as many of us had hoped at the time. But also during that period, we know that there was a VAT hike looming at the time, around that time. And of course, globally, I think a lot of consumers are watching what's happening. And there's been quite a lot around that time, around trade tariffs, the budget, etc. So all of those things would have been in the mind of the consumer, and to still see that sentiment high at 85%, I think is absolutely a great outcome, and very, very interesting for us to have seen that outcome.
Okay, great. So we're seeing a clear trend toward off-grid living and sustainability. What do you think is driving this shift among homeowners?
One of the elements, and I guess it comes out a lot as we engage, is that there's a rising consciousness around the environment. And we see it in print, we see it in digital media and conversation with customers. So that's certainly showing up in the sentiment index itself. But then again, there's another reality that in certain pockets of the South African market, we've seen water disruptions. And of course, we all know that we had gone through load shedding, and that has obviously caused some households to rethink their reliance on public utilities. But I think last but not least is the growing understanding of what sustainable living can actually do for a household, particularly around savings that it can actually produce. All these things, I think, have an impact in some shape or form in many consumers considering to go off-grid or live sustainably. And we've seen it through the index, with many indicating the use of solar power. And you and I know that the rise in solar power usage came through at a time when we had load shedding in the country. I think with water issues that we are experiencing, we certainly see customers indicating that they are looking at more usage of water sustainability solutions. And of course, many are thinking about how to grow their own fruits and vegetables, which is absolutely encouraging for the environment and for the economy.
Yeah, so I think people sort of have to sort of adjust as soon as these kind of things happen. But we also see that 76% of respondents expressed a desire to disconnect from state-supplied electricity. I mean, what implications do you think this has for lenders like yourselves, developers, and municipalities?
This is quite a loaded question. I think it perhaps even deserves a conversation of its own. But Neale, Very happy to cover very high level. I think for us as lenders, and I'll start with the very first thing, because we always think about the solutions we bring forward and what it means for affordability. We certainly think that, you know, sustainability with regards to you know, solutions off grid do actually give a relief from a savings point of view. We've seen consumers come forward and some suppliers are giving us stats that shows that actually the consumer actually saves, which for us as a lender, it unlocks affordability and enables us as banks and lenders to obviously do more for the consumer. I think the second thing is really around how we think about it, even for different types of client. If you think about business banking, it's rethinking how we actually provide financing solutions that meet the needs of a business banking client. It does also, you know, challenge us as we think about our credit risk considerations. I know in business bank, you know, colleagues would often talk about maybe we should be looking at system performance and how system performance feeds into our credit scoring models when we score a consumer. I think last but not least, on the lending side, I mean, we are hugely aligned to the intent of ensuring that impact to the environment, we think about it sustainably, and we've made commitments around net zero carbon emissions. So that also comes into play as we think about the market being more open to alternative power solutions. And of course, it helps us as big players in the economy to see how we help the market also transition to other forms of energy. I think the second part is, I do want to mention suppliers, Neale, if you don't mind.
Sure.
And I say this because at the height of load shedding, and at a time when we saw that there was a growing need for financing solutions, we absolutely saw opportunity for strategic partnerships. So for suppliers, this has positive implications, because what it does, it actually brings more opportunities for strategic partnerships with many players, some suppliers with lenders, etc. And I thought, I think for an economy, it is absolutely a great thing. On the developer side, I do think with the growing demand, it's how developers think about scaling those solutions with the product that they put to market. I think it's also being open to evolving their business models, because some consumers or clients will either want to lease, may want a subscription model. They may not necessarily want to purchase a full capability and own it. So it's how we think about those business models. And last but not least, I think for developers, it's really around the need for standards and compliance in this particular market. For municipalities, the implications would be around revenue risk that this may result in. It does also compel municipalities to think about upgrades and modernization of the grid, as you get a myriad of consumers wanting different solutions. But also it does impact tariffs restructuring and is a call for new services. And again, when we talk about municipalities, one can never forget that it does impact policy making and incentives, how we think about incentivizing the market to go sustainable living. And as I say, Neale, this is quite I think a large topic on its own. And
it is
one that we can absolutely unpack from different lenses with various experts in this field.
No, definitely. I think it's it's going to be a conversation to be continued, without a doubt. I don't think that it's just going to leave us just like that. So, I mean, and then you touched on obviously the water shortage, and there's also growing focus on water independence, boreholes, rainwater harvesting. I mean, from a future home loan valuation or bond approval, how could this impact that, or will it impact it?
Yeah. You know what I've seen, Neale, properties that have water solutions, and it's very similar to what happened with load shedding, that properties that had alternative solutions are actually more marketable. I think let's start there as a base. It just makes it so much easier for the property to be marketable, because that property has reduced friction for a new buyer. So the buyer doesn't need to worry about installing the new system, whether it's for water, for electricity. I think that's certainly number one. I think the second one, it does have an impact in some shape or form. Of course, market plays a role here on valuations, right? We have seen, though, the negative side, which I guess it's important for listeners and for those that are watching to make sure that they don't fall into the trap of not maintaining these systems, whether it's for water or for alternative energy, in response to load shedding. We've seen cases where they're not maintained and the value is not seen by the market. So absolutely more marketable if the system is there, it's well maintained, and the right certificates are in place. And then, of course, I do think that it does impact the market where valuations are concerned.
Okay, great. Thanks for that. So also the Absa index shows the average age of first-time home buyers has dropped to 38 years old. So what factors are contributing to this trend, and what are these buyers looking for?
I think this is a great trend, and I certainly look forward to it further coming down, I hope, over time, because it's important for the market to have access to home ownership as early as possible. But what we think is driving this, before I get to what buyers are looking for, is improvement in affordability. And of course, a large part of this also has to do with the economy, with economic opportunities. But, the rates, as rates come down, generally what we see is that the first-time buyer segment, it does open up. Those that are ready to enter the property ladder suddenly find themselves in a space where they are able to consider buying a property. So it's certainly one of the factors. The second one, and I reflect, Neale, even as I think about myself having been a first-time buyer many, many, many years ago, without mentioning the year, I certainly think there's more solutions that are out there in the market today than there ever was many years ago. If you think about propositions around attorney discounts, lending going above 100%, we've certainly seen a lot of that in the market, where consumers don't need to worry too much, especially those segments of the market that just don't have enough of savings for the transaction costs. We're certainly seeing banks come through with above 100% lending. I think, the second last one for me is really around how easily accessible it is for a first-time buyer to really access what many would deem to be the most daunting and complex process. I think it's simplifying every year with the availability of digital solutions. And then last but not least, I do think many South Africans still believe in property as a long-term investment, and many will reiterate that they have a dream to own a home. And those that are able to, do try and enter the market. So it's great to see that age coming down. And I hope to see one day it come down further, even below 30, because it's good for the economy. It's good as a feeder stream into the housing ecosystem. And it's great for wealth creation overall.
Absolutely. No, thanks for sharing that. And so if we look at sentiment, it remains highest in provinces like Limpopo and the Free State. And I was in Bloemfontein last week as well. Interesting. Yeah. But what's driving these regional confidence levels? I mean, how does it compare to Western Cape, Gauteng, KZN?
Yeah. So, Neale, when we delved deeper and we looked at the data and we tried to make sense of what it actually means, I think the first principle that came forward for us as we looked at this was that actually migration trends have a huge impact on dynamics at a regional level. And what we had seen is that coastal regions, let me be very specific because I know KZN gave us a different outcome, but Western Cape and Eastern Cape are still seeing customers come in. They're actually gaining more customers or people coming into the province rather than leaving the province, which results in net positive migration of customers. And typically customers would be attracted to lifestyle. It's local economic opportunities that open up. And of course, as more consumers get into a market, demand would naturally go up from a property perspective. So that's certainly the biggest driver. And absolutely, we've seen it Western Cape and Eastern Cape. KZN, for some reason, we're seeing an uptick in people moving out of KZN. And likewise, when we look at other provinces, I think Gauteng is still seeing customers that are leaving the province, but Gauteng is big. It's so big,
of course,
that of course we're not going to see the numbers alarming, but we're still seeing that migration of customers to coastal areas, more specifically Western Cape as the dominant one, and then of course Eastern Cape showing to be more attractive.
What was quite interesting, the event I attended last week was with Lightstone, and they mentioned that the most affordable property in the country is actually in the Free State. The average house price index, I think it was 460,000 versus almost 1.2 million in Gauteng and 1.8 million in the Western Cape. So I don't know whether that's a possibility, if it's the affordability. I know there's a demand for student housing and that kind of thing.
Yeah.
But certainly the sentiment is high in Limpopo and Free State, which is great. But it's very interesting to see just what it is in those two areas in particular.
Yeah. No, very, very interesting. And certainly price point also counts. Thanks for sharing, Neale.
Yeah, sure. So we're seeing also selling sentiment dipped slightly as well, with many owners holding out for better prices, understandably. What advice would you give sellers navigating the current environment?
This is a lovely question. And I'll start off with the fact that, individual circumstances are absolutely most important, and where one finds themselves in the market. So that's absolutely number one. I think the second one, I think it's important for sellers to understand the type of market that they're in, because once you understand that, you then understand when is the right time to sell and when is the right time to think about holding your property, right? I mean, Neale, we just spoke about different provinces. If you think about it now, I mean, Western Cape has significant demand. It's a different market altogether compared to the national market. So a seller that's sitting in Western Cape versus a seller in Gauteng, they're in fundamentally different markets. And that's why it's so important that sellers have to understand the market that they are in and not take a national view only and take that as the final view. I think the other one for me is around transaction costs when you do think about selling, because there's a lot of requirements. I mean, if the property is still bonded with the bank, there are cancellation costs. Of course, when you think about selling, there's agent fees, there's tax implications if it's not your primary home, because we talk about capital gains tax in that instance. There's also, a thought around what improvements do you make at what point in time and how much you do, because what you don't want is to overcapitalize on your property. And last but not least, is also how much you owe. So my advice is certainly to think about these things, and I will always start with your individual circumstances, follow with the market, follow with understanding your transaction costs. And then last but not least, look at your own finances, again, which links back to the first principle that I mentioned.
Wonderful. So we're also seeing, despite macro pressures, investment sentiment is at a record high. I mean, why does property continue to be seen as a stable environment? I mean, I know you shared a little bit just now, but yeah, that's amazing.
No, it's a good thing. It's a good thing, Neale. But, I always think the investor segment, because, in this market, we talk about different market segments. I just think the investor segment or the investor client, and let's talk about a property investor, generally takes a long-term view at the market. And typically, your more experienced investors understand the dynamics of the market. So when they look at market conditions, they look at a whole host of things, and they understand that property accumulates in value, and hopefully they have a good understanding of what drives that, the good returns and demand for rental properties, and they look at all of these things, which is fundamentally different to the sentiment of a first-time buyer, right, Neale?
Absolutely. No, absolutely. I'd echo those sentiments. But we've also seen buy versus rent sentiment soften. Do you think this is just a temporary shift, or do you see a longer term trend toward renting as a lifestyle or a financial strategy?
Yeah, you know what? This tends to shift based on market conditions. And I want to go back to the most recent era now with COVID. You remember, Neale, when we went through COVID 2021, 2021, and the rates started coming down. You should have seen that. I mean, you know this, the demand suddenly shoot up. And many that were renting entered the property market because suddenly they looked at the numbers and said, but hang on, I'm paying rent, and what I'm paying, I can actually own property. So it was driven by market conditions at the time. And I do think now, as we look at the rates slowly coming down, and we'll talk about that towards the end, I do think over time it does unlock affordability, right? And many South Africans, I still think, fundamentally believe in home ownership. So back to your question, I think it really depends on market conditions and sentiment. Particularly, I use the example of COVID, what happened during COVID. And of course, post-COVID, as the rates started coming up, we also saw buyers, first-time buyers, a lot of buyers pull back. So it's definitely, I'm not seeing a long-term renting as a lifestyle, but I do think there are certain segments of the market for whom renting is absolutely necessary. And it might be lifestyle, it might be demands at that point in time, it might be life stage, it might be for flexibility reasons, and for some it might be for financial strategy reasons.
Absolutely. No, thanks for sharing that. So finally, let's look ahead to the rest of 2025. What signals or indicators will you be watching closely, and what should buyers and investors be thinking about right now?
We're certainly watching the environment. I think globally there's a lot that's happening. We're obviously holding out and hoping that things work to our favor, or at least as we hope. We are hoping that there'll be a further 25 basis points at the July MPC. But I wanna underline that, of course, that we expect the MPC to remain cautious as they look at global events and as they look at the economy and the uncertainty that may be built in. I do think the second component is really around what we look at as lenders' default rates over time, and we suddenly see some sort of easing that's starting to come through. We're not out of the woods, but we are seeing some signs of improvement, and that's something that we are watching for from a lending perspective. I do think the positive sentiment is likely to continue over the next couple of quarters as consumers find relief over time from where they've been, particularly as we think about the rates that were going up. I do think if at some point rates go up, of course, we will see some segments of the market that will pull back. So what should buyers and investors be thinking about right now? I think it's always going to be about your own financial position. If you've got property and are holding on, understand your market, understand whether it's the right time to sell, understand who you're selling to. And I think if you're an investor and you're taking a long-term view, of course, there will always be opportunity, Neale, in this market. I mean, we look at data points from our partners in the industry that show us vacancy rates for rental properties. And you look at Western Cape. I mean, Western Cape is sitting with the lowest vacancy rate. So if you're an investor that's looking at Western Cape, you might be thinking that this is a great opportunity for rental income. So certainly think about the market that you're in. If you're a buyer, it's a beautiful time. If you are ready and your financial position certainly allows, it is a time because there's just so many more solutions that are out there. Let me speak for Absa Bank. I mean, we certainly offer above 100% lending, and we do so for different segments of the market. We certainly offer the attorney discounts because it's one of the friction points to a property transaction. And of course, for those that do bank with Absa, there are campaigns that we run from time to time, and some of those relate back to our rewards value proposition, which allows for a significant cashback back to you on a monthly basis. Those are the things that always excite me and transcend economic conditions, Neale.
Wonderful. So that wraps up our conversation with Nondumiso Ncapai, Managing Director of Absa Home Loans. Thank you for your valuable insights and analysis. For more details on the Absa Homeowners Sentiment Index, you can visit absa.co.za, or you can come to rei.co.za for related articles and resources. Thank you for watching, and we'll see you in the next episode. Wonderful chatting to you, Nondumiso.
Thank you so much, Neale. Appreciate it.